Hello, welcome to this webinar on early stage innovation companies presented by ESS BIZTOOls. I'm Peter Towers, Managing Director of ESS BIZTOOls. Thank you for your support as subscriber members of ESS BIZTOOls, and I'm looking forward to presenting this update to you today. If during the webinar you have any questions, can you please type your question into chat and I will answer the questions a little bit later on. If you're watching this webinar at a later time, time more suitable for you, and you have a question, please send me an email, peter@essbiztools.com.au. Today we're going to be overviewing early stage innovation company, which I think was a very exciting move that the previous Liberal National Party government made about 8 years ago with the introduction of crowdsourced funding, equity raising, and early stage innovation company capital raising. So we're looking at early stage innovation company capital raising today. So let's just go through it. It's targeted at young companies, not young executives, but young companies. So the companies have to be under 6 years of age. There's special provisions for those that are under 3 years of age, and then some companies up to 6 years can be eligible. There are eligibility tests for the companies to comply by, and primarily there is a bias towards a company that has undertaken research and development activities and claimed those activities in their taxation return, in the company's tax return, because it is the details that have been lodged in the company's tax return that's one of the essential trigger points for the company to be assessed as being an early stage innovation company. So you need to start thinking about your clients. You've got young companies who have been undertaking research and development or are getting ready to do something in the research area. You could talk to them and say, well, if you become a company, you could potentially go down this path, which can lead to the opportunity to be able to raise capital. However, very new companies that are normally under 1 year of age have not undertaken the R&D activities, or if they have, they might not have gone through the lodgement of the tax return process and all that entailed with that, but they're able to clearly articulate that they have a vision that they can be a successful applicant to be deemed to be an early stage innovation company. So there's 2 pathways that can be undertaken on the eligibility process for this determination. Documentation is very important in the accreditation process. I cannot overemphasize that. Documentation is extremely important. And the accreditation process is just the beginning. So the company will be using the early stage innovation company accreditation to attract investors. If the company has qualified under the principles test, which is the test that I suspect a very young company would utilize because they would not have the history of actually having completed the R&D work sufficient to lodge full details in their tax return. So if they've lodged their material under the principles test, they need to submit that documentation to the Australian Taxation Office for review. I'm told it takes about 6 weeks. It's a joint review between the Australian Taxation Office and Oz Industry, who are the government department that advise on all research activities. And if the ATO is satisfied, they will issue a certificate to the company that the company has qualified as a early stage innovation company. And that certificate needs to be a document that's made available to potential investors, together with, I suggest, the documentation that was submitted to the taxation office as well. Because investors or their advisors will be very keen to ensure that this is legitimate, that this company has been accepted by the ATO. And I'll explain the reasons in a bit more detail for that in a moment. But if the company qualifies under the gateway test, which I'm going to show you in a moment, but the gateway test is a series of questions that there's points allocated for various questions. So they're not all earning the same number of points. And if the company accumulates 100 points, it is deemed to have self-assessed as an early stage innovation company and can proceed with dealing with investors. Now, that's a significant risk area. That's a risk area for investors who will undoubtedly be saying to themselves that, have they appropriately done this? Were their answers to the questions that they scored themselves on properly answered, properly submitted? Were they honest? So our recommendation within ESS BizTools is that you complete all of the forms, or have your client complete all of the forms, which are the overall documentation as to why they have achieved more than 100 points. Because ultimately that information may be required by the tax office. So the company definitely needs it, because the investors are not going to see a certificate from the Australian Taxation Office for a company that has self-assessed under the gateway test. As indicated on the sides, in our system that you've got the use of, we have got templates for each of those questions, so that if your client is claiming that they've qualified under the key research and development question, which is, have you spent more than 50% of your expenditure in the previous 12 months on research and development activities that have then been claimed in the company's income tax return? If you answer yes to that, the company earns 75 points. They're only after 100, so it's the big question. There's some key components there, of course. It's not a matter that the company believes that they've undertaken research and development that happens to have cost more than 50% of their total expenditure for that 12-month period. It has to have been submitted in the company's income tax return for that year. And all of the documentation obviously has to be there, has to be maintained. We're suggesting that to create the credibility with the potential investors, that the files are made available to the potential investors and their advisors to check. Because there is a significant risk for an investor in investing on the basis of the gateway test. Not so on the principles test, because a certificate's been issued by the Australian Taxation Office saying that the company has qualified as an early stage innovation company. No such certificate is issued for a company qualifying under the gateway test. So what I'm then saying is investors are going to require more information just based on viewing either the certificate from the ATO for the principles test or the documentation from the company relating to the gateway test. I don't think they're going to be enough to get a final commitment and a bank transfer or a check paid across to the company. So what else is needed? The normal documents that are required in any investment decision. The business plan, which clearly identifies the corporate vision and the exit strategy, because these types of investors are normally not interested in being involved in the company for the next 25 years or whatever. They tend to want to have an exit. They're there, their money's there, they help to get the company established. Hopefully the company will create profits or great technology, which improves the company's overall value, so that they can exit at some stage. Perhaps the total investors will exit at that stage, or perhaps the founders will say we'll remain in and new shareholders will hopefully come in, or the founders may have created enough wealth in the meantime to be able to purchase the shares that these investors are going to subscribe for at this stage. What the investors will be interested in is to see whether your clients have even contemplated this, because they need to. They need to understand that most of these types of investors are not looking for a very long-term relationship. In fact, some of them would be quite happy to have an exit executed in 3 to 4 years' time. We're going to need predictive accounting reports. That's the budgets, or if it's only one operation, the budget, but the key drivers, looking at things like research and development expenditure, debtors, creditors, inventories, and other key items, so that it's summarized in more detail than just locking it away within budgets and cash flow forecasts. Then, of course, the cash flow forecast, the projected balance sheet, which shows what this company is going to look like in 1 year, 2 years, 3 years into the future. A fund statement identifying each year the movements of cash within the business. The company should summarize details of who the board of directors are, what's their background, what's their experience, and the leadership team, so that they've got an overall picture. They can see the vision of this company, the projection, financial performance, where it's going, and very importantly, what the directors and leadership team think the exit strategy might be, and when is that scheduled. Now, the early stage innovation company grants privileges to the investors. There's really no privilege being granted to the company other than the very important recognition that the tax office is able to give to the companies that are assessed under the principles test, because that they will receive a certificate that they've been accepted as an early stage innovation company. And if you're assessing under the gateway test, the company must have this documentation file, because they need it for the tax office ultimately in any case, but they should be supplying it to the potential investors. And quite frankly, I see that as your role as an accountant, advising your client, putting all that together into a package, a very presentable package, so that it can be made available to these investors. Because the benefit the company is getting is that the investors have been offered an inducement to invest in their company, and they will receive the subscription funds from those investors. It gives an early stage innovation company some sort of priority in the pecking order of trying to raise capital. But it'd be a very unwise board of directors and leadership team that only relied on that. And that's why they need the vision, the enthusiasm about this company, because investors are still parting with their hard-earned money to invest into this company. They want to know what its prospects are, where it's heading. They want to know that exit strategy. So there's no separate legislation actually relating to the raising of the capital. like there is for crowdsourced funding equity raising, which are amendments to the Corporations Act, as you know, and there's a completely separate process for a company that is qualified as a crowdsourced funding equity raising company to be able to raise capital. They can raise up to $5 million as long as they qualify. In the early stage innovation company, there's no such process. So your client would be raising capital under Section 708 of the Corporations Act, which specifies a maximum capital raise in 12 months of $2 million and a maximum number of investors in that process of 20. That's worth bearing that in mind in the overall process. Now, if a company does not qualify for the early stage innovation company because of its age or annual expenditure or annual income, which are all matters which we're going to review shortly on the website, potential investors still might be prepared to invest even though they did not receive the inducement. Or it may be possible that the path to seek capital now is as a crowdsourced funding equity raising company. But there will be no inducement arrangements with the investors. So let's get started. We're going to go onto the website of ESS BIZTOOLS, and we will so we're now on the members homepage of ESS BIZTOOLS, which hopefully you're familiar with. And I'm going to click on over here in the left-hand column, the members products menu, the early stage innovation company capital raising. So this is the product package on early stage innovation company. If you're not familiar with this, you can read some material there, but we will bypass that at this stage. You can come back and look at that. And what we are going to now is the material that's contained within early stage innovation company. We have a procedure control form, which if you're familiar with the material within ESS BIZTOOLS, you'll know that every product package has a procedure control form. And then we have the various BAS forms, business advisory services forms, that cover a whole range of information. Because we've embedded in this the material that's going to be needed to be able to raise capital as well. So in the first place, I want to just bring up a couple of first of all, we'll go to the procedure control form. And I'll just so you should be able now to see the procedure control form. This is a document which will guide you through this whole process. Divided into sections. If you're not familiar with one of our procedure control forms, I'd suggest that you have a good look at it later on. We're going to look at some of the material that's mentioned there in a moment, to some of those papers. I just want to let you see what else is in the procedure control form. And it's a document that's been designed to enable you to record what you have done for an individual client who is interested in early stage innovation company. It's forms, keep you informed and to help you undertake your tasks. So if we go back to the beginning, I just want to bring up that first paper, which is the due diligence review type paper. So we now have on the screen early stage innovation company due diligence. This is a paper prepared for you, which summarizes the process that we're going through today. So a lot of this has started with the one-on-one meeting. You've had a discussion with your client. You're aware that they're undertaking some research and development activities. You know that they think they're going to be successful in that and they haven't got enough money to carry it on. So they could be interested in raising capital. And what you need to make your clients aware of is that you're probably going to be wanting to suggest to them that the target is entrepreneurs and inventors. And the product package is, you've got the ESIC product package, which is summarized in BAS 9201. You can read what's included in the product package. Contains the various material that I'm going to refer to today. And it sets out some of the information that's contained in the procedure control form. So that's a paper that I would suggest that you read and understand, so that you're able to communicate with your clients as to what this whole process is about. We then got the summary on the early stage innovation companies, which you can badge this paper and show it to your clients. So this paper has been produced for your training within your firm, but also so you could hand this to your clients. What's it all about? What's the eligibility? And we're going to have a look at the eligibility summary, which we've prepared shortly, but it's all summarized there. The 6-year requirement and the 3-year requirement, talking about the gateway test. The company must qualify under 2 limbs, expenditure and income, cannot be listed on a stock exchange. And here's the summary of the gateway tests. So that's the reference I was talking about before. If 50% of the company's total expenses for the previous income year can notionally be deducted under as research and development expenditure in accordance with the Tax Act, then the company earns 75 points. If the company's been admitted to the Accelerating Commercialization Grant Program, it earns 75 points. If the expenditure on research and development, though, was between 15% and 49.9% of the company's expenditure, they can earn 50 points. But again, it is that expenditure must be claimable in the taxation return as being eligible expenditure relating to early stage innovation companies' R&D processes, and so on. We're going to look at those activities in a bit more detail in a moment. So hopefully that, if you were not aware that that paper existed, that paper's there to help you on the process. And now the other very interesting one, because we've talked about it a couple of times, and you might be asking questions and saying, well, really, what's in all this for the investors? So this is the tax incentives for early stage investors in a company that is certified as being an early stage innovation company or has self-assessed and has all the documentation as I referred to earlier. So the benefit that the investors get is that they receive a tax offset calculated at 20% of their investment, which is capped at $200,000 for a sophisticated investor and is capped at $10,000 for a retail investor. The maximum investment that a retail investor can make in an early stage innovation company is $50,000. That's where the $10,000 figure comes from. There is no upper limit as to what a sophisticated investor can invest in this type of company. But the tax rebate is phased in at $200,000, which is obviously computed on $1 million worth of investment. So we have summarized there what the qualifications are. There's the test time determination, which is the 6 years and the 3-year type rules, which we'll have a look at shortly on the form that we've prepared. We've then got the details of the gateway test. So this is to ensure that your client is giving the potential investors full details of how they will get their tax offset, which they'll be very interested in. And you may have clients who are interested in investing in one of these companies. And then these are the key questions on the principles-based test. There's 5 questions. Is the company generally focused on commercializing one or more new or significantly improved products, processes, services, marketing, or organizational methods? Does the company have high growth potential? Does the business have the ability to successfully scale that business? Has the business potential for sales to a broader market than local market? And is there potential for competitive advantage? I believe that the tax office and Oz Industry are looking for more than a yes/no answer to those questions. In fact, some of those questions are very similar to questions that Oz Industry ask in some of the government programs that they administer. And they're looking for at least an A4 page of supporting documentation. I've had one client that produced a external consultant prepared report by a marketing expert, and it was 28 pages of information to answer those 5 questions. And they were accepted by the tax office. So it's necessary to do that. And there's this comments about the self-assessment in the gateway test, a bit more about the principles test, the amounts, sophisticated investors. So all the information's there to assist you. And the other benefit that the investors get is that if they hold the shares that are allocated to them as part of this accreditation process as an early stage innovation company, not some more shares they might buy in 12 months' time, just this initial parcel of shares as part of getting the company that accreditation. And they hold those shares for longer than 12 months and less than 10 years, they don't pay any capital gains tax when that parcel of shares is sold. And that might be the only parcel of shares they own, of course, in that company. If they still own those shares at the end of 10 years, the company can be revalued and they have a new cost price for future capital gains tax calculations. So that's the benefits. So 20% of their investment up to those limits, $10,000 for a retail investor, $200,000 for a sophisticated investor, calculated at 20% of the investment, remember. And if they hold the shares for longer than 12 months and less than 10 years, there's no capital gains tax when the shares are sold. If they still got them at the end of 10 years, the company is revalued and they've got a new cost price determination for their investment in the company. So that paper's there, so you can distribute that to your clients to utilize with the potential investors. If you've got any questions, please send me a message on chat, and I will try to answer it during our presentation. And we'll get through quotations and all that. And with the work program, we've set it all out for you, what you need to do. And I now want to take you to our calculator. This is the form which we developed for our subscribers to use. I just want to go back to the beginning. So this is a form that you can use because we're on the website. We're taking you through and showing you what's in the system. You started off by completing the company name. So the first test is to determine exactly how old the company is. And date of incorporation is very important. And what their income was last year and what the accelerating commercialization grant funding they may have received. That's the first part of it. The test time determination is if the company is under 3 years of age. So was the company incorporated? Did the company have expenses of less than $1 million? And did the company have income of less than $200,000, not including the accelerating commercialization grant? Now, the accelerating commercialization grant is now finished. It's been replaced by a new grant. And I haven't ascertained yet whether the government has made any amendments to include the industry growth program, which is the replacement. Hopefully they have. For companies under 6 years of age, there's a separate process that you can go through and look at. Again, it's when the income was earned and what the expenditure was. And there's also a further test time determination for a company registered on the Australian Business Register in the last 3 years. I can only assume that relates to shelf companies that were never incorporated. They were just sitting there. That's there. Now, the gateway test then asks a series of questions. So our forms set it all out. Now, I've talked to you about the research and development. So if it's more than 50%, subject to that expenditure having been declared in the company's income tax return, so it's been claimed for research and development purposes. And it can also be 15 to 49.9% of the company's expenditure. Has the company been in accelerating commercialization grant? If it has, the company can earn 75 points. And our system here records the points as you go through and enter these details. Has the company been in an accelerator program, which is available in capital cities mainly, and the company can earn 50 points from that process. Documentation has to be produced. That's why we've got various sub-items there. Has the company been able to raise $50,000 in investment from one or more arm's length investors prior to this time? So this money is not income being treated as part of the accreditation process, and therefore those investors that put the $50,000 together do not receive the benefits of being an early stage innovation company investor. There's details there. And when were the shares issued? They total, and that process, if your client has accumulated $50,000 before the early stage innovation company date, would earn 50 points. Has the company got any equitable rights under a Commonwealth law relating to a patents or licenses of a standard patent, or the owner of a plant breeder's right granted in Australia? If so, the company can earn 50 points from that. And has the company got an innovation patent or a registered design in Australia? Details have to be submitted, but the company can earn 25 points from that. And has the company a written agreement with an institution or body that's summarised as being someone under the Higher Education Funding Act or the Industry Research and Development Act? One of, the company can earn 25 points. So in that way, we're building up. You'll get your result. Have you achieved the 100 points? If so, within the ESS BizTools packages, you've got supporting documentation for each of those items that the company is claiming points on. You don't worry about the other ones. You complete those ones with the points, with the documentation to prove what has happened. And that's your file that you need to make sure that your client's got, because in the tax return, when the company lodges it, you'll be declaring you've got all that, and you may be asked to produce it to the tax office. But as I said at the beginning, I think that's very important information to make sure it's tabled to the investors or potential investors to satisfy them that you've undertaken the process and it is very obvious that you will qualify, or your client will qualify, for this early stage innovation company status. Now, at the end of that, we say that's the end of that. We then move into the principles test. Now, let me stress, a company does not have to do the gateway test unless they want to. And if they were a very young company that's got great ideas, now those great ideas may have been developed by one or two people in a sole trade or a partnership situation. They've got to a stage where you've talked to them about this and said, wow, you should be trying to get this early stage innovation company status. That will give you an advantage to raise capital, so that we can then go through the principles tests. There's 5 questions. I went through them before. You go through and you then sit down with the client and make sure the answers are submitted. And in many cases, the client will need to hire a separate organisation, normally a marketing type organisation that might understand their technologies that they're utilising, who will write the confirmation information to satisfy the tax office. So it's very important that every component of this process, every piece of paper, is saved and is able to be produced when it is required. So that is the overview of the process, and is able to be utilised to enable the company to be able to submit its information to the Australian Taxation Office. So that's the summary of our overview of the early stage innovation company. If you think of some questions later on that you would like to ask me relative to the process relating to the early stage innovation company, please send me an email, peter@essbiztools.com.au. Thanks for your support of ESS BizTools. Have a great day. Goodbye.